Jack Bogle, the founder of Vanguard Group and pioneer of index investing, was indeed a great and highly influential figure in the world of finance. He is known for his innovative approach to investing and his commitment to providing low-cost, accessible investment options for everyday investors. Let's discuss some of the key aspects of his investing skill and why he was so successful.
Last month on Louis Rukeyser, you summed up your investment philosophy as buy everything and hold it forever. Do you still subscribe to that in light of what the market has been doing, or would you unload some things now?
No, my theory is not subject to the ups and downs, the peregrinations of the stock, the unpredictable peregrinations of the stock market. It's painful to do, but I think the idea of owning the stock market is the best approach to equity investing, and perhaps I didn't make that thoroughly clear there. I have never felt that equities should be the only portion of an investor's long-term program. I myself am about 50% stocks, 50% bonds, for example. I was brought up when I came into this business in 1951 with the Wellington Fund, which was and is, and I hope always will be, a conservative balanced fund. But I think the idea of buying and holding forever and not trying to make adjustments requires that you've gotten it right in the first place. That you can only hold tight if you've bought right, if you will. And that is to say, have an asset allocation that has something to do with how many years you have to accumulate money, how much resources you have at stake, how much income you need, and how much courage you have to ride out the peregrinations of the market. So you've got to take all that into account from that simple statement.
Is there a case then for market timing? What should you do when the index funds are losing money?
Well, as my friend Jim Glassman quoted me in his op-ed piece in the Wall Street Journal yesterday, it's a quote I don't even remember where I made, but it said, I don't know anybody who has ever been successful in timing the market. I don't even know anybody who knows anybody who has ever been successful in timing the market. Last year, these last 2 years, the index, S&P index, has outperformed roughly half of the funds, a little bit less last year, just about half this year. I don't regard that as a significant long-term sign at all. First of all, the number of funds is not a relevant statistic. We use it because it's convenient, but if you've got a few little funds in there that do well, they count just as much as a few big funds. The reality is, no matter what the statistics tell you, indexing always wins. I say that because index is delivering the market return, and all those investors out there are by definition getting the market return themselves, less cost. So if statistics don't capture that index advantage, it will be corrected in the next year or the next year. And by the way, if you look at even the last 15 years, counting those last 2 years, the index has outperformed about 75% of all active managers.
Bogle emphasized the importance of a long-term investment perspective. He discouraged market timing and frequent trading, which can lead to higher costs and lower returns. Instead, he encouraged investors to buy and hold diversified portfolios over extended periods, benefiting from the compounding of returns. Consistency and discipline. Bogle's approach was characterized by consistency and discipline. He stuck to his principles even during periods of market volatility and underperformance. His unwavering commitment to low-cost, passive investing made it easier for investors to stay the course, avoiding the pitfalls of emotional decision-making. Bogle believed that investment professionals had a fiduciary duty to act in the best interests of their clients. He was a vocal advocate for transparency, accountability, and putting clients' interests first. He urged investors to be cautious of financial products and professionals that did not align with this principle.
I've told particularly young people in the office who are really petrified by this market decline that it's the best thing that ever happens to him. And if you think about it logically, of course it's wonderful. I mean, think of, say, the young man I was talking to yesterday who's probably 25 or 26 years old, and he's got the rest of his life in invest. And I said, well, let's suppose that Chris Scott, his name is. I said, let's suppose, Chris, that the market's going to end up at Jim Glassman's 36,000 by the time you retire. Do you want to be investing all your money when the Dow is at 35,000, or invest it all when it's 9,000? Just think about that for a minute. In other words, you want a long time to invest at low prices, and it's certainly a frightening advantage for those of us who have some money at work in the market today to think of this as a blessing. But it is a blessing because in the long run, investing depends on accumulating money at sound prices and not inflated prices like we have. I also think the general economy and the financial markets are well served by a return to reality. When you leave reality and depart from the laws of gravity, there's nothing but bad things that can happen, and the higher you fly, the more you fall. We flew quite high enough, and I think it's a blessing maybe a blessing in heavy disguise, a blessing that we've come back a little bit toward the ground.
Bogle was also an educator and author, writing books and articles that explained his investment philosophy to the general public. His books, including Common Sense on Mutual Funds, continue to be valuable resources for investors seeking to understand the fundamentals of investing. Jack Bogle is perhaps best known for popularizing the concept of index investing. He introduced the first index mutual fund, the Vanguard 500 Index Fund, in 1976. This fund aimed to replicate the performance of the S&P 500 index. His idea was that instead of trying to beat the market through active management, investors could simply hold a diversified portfolio that mirrored the broader market's performance. This approach has been proven to be highly effective over the long term. This is what Warren Buffett about him.
There's one more person I would like to introduce to you today, and I'm quite sure he's here. I haven't seen him, but I understood he was coming. There's I believe that he's made it today, and that is Jack Bogle, who I talked about in the annual report. Jack Bogle has probably done more for the American investor than any man in the country. And Jack, could you stand up? There he is. Jack Bogle, many years ago, he wasn't the only one that was talking about an index fund, but it wouldn't have happened without him. I mean, Paul Samuelson talked about it, Ben Graham even talked about it, but the truth is it was not in the interest of the investment industry of Wall Street. It was not in their interest actually to have the development of an index fund, the index fund, because it brought down fees dramatically. And as we've talked about some in the reports and other people have commented, index funds overall have delivered for shareholders a result that has been better than Wall Street professionals as a whole. And part of the reason for that is that they brought down the costs very significantly. So when Jack started, very few people, certainly Wall Street, did not applaud him. And he was the subject of some derision and a lot of attacks. And now we're talking trillions when we get into index funds, and we're talking a few basis points when we talk about investment fees in the case of index funds, but still hundreds of basis points when we talk about fees elsewhere. And I estimate that Jack, at a minimum, has left in the pockets of investors without hurting them overall in terms of performance at all, gross performance. He's put tens and tens and tens of billions into their pockets, and those numbers are going to be hundreds and hundreds of billions over time. So it's Jack's 88th birthday on Monday. So I just say happy birthday, Jack, and thank you on behalf of American investors.
Jack Bogle's success as an investor and industry leader can be attributed to his visionary thinking, commitment to simplicity and transparency, and his passion for helping individual investors. His legacy lives on through Vanguard and the widespread adoption of index funds and low-cost investing strategies, which have empowered countless investors to build wealth over the long term.